All right, today we're going to go through how to use Stan's Mansfield relative strength indicator to choose A++ setup. He had the forced to true approach, so you look at the best index and then you choose the best sector in that index and then you choose the best stock in that index, and he'd use the Mansfield relative strength to do that. He'd put whatever instrument he wanted to know. He'd pop in here the group he wants to compare it against, and if ever the Mansfield strength was going upwards above the zero line, and the price action of the equity or the asset was going up, was above an inclining 30-week moving average, it was a buy zone. And this is pretty cool on TradingView. This indicator highlights green whenever you have those conditions above an inclining 30-week moving average, above the zero line. What I've added is I started drawing trend lines on the Mansfield relative strength, and they've given additional confirmation of changes in trend, ideal buying points, or points to look that we might be approaching a good entry. So this podcast today, we're just going to go through how to know when it's time to change instrument to play in the precious metals complex, right? In the precious metals complex, you have gold, you have silver, you have GDX, the gold miners, you have Hui, and they all break out at different moments, and some start outperforming others at different moments. Usually it's gold that breaks out first. So the first thing you want to know is gold, when is it starting to outperform SPX? Once we know that, then we know we're at the beginning of a precious metals bull market. And then we can move on to the other elements in the precious metals complex to see when it's their turn that we should be reducing our exposure to gold, the metal, and starting to go into silver or gold stocks or silver stocks, etc. This is just an example. In 2016, gold versus the SPX trend line break above an inclining Mansfield relative strength, and then you had a great signal here. You had a retest, and then starting to go up above an inclining 30-week average, and you could have had some nice profits here. As soon as you're out, as soon as you start underperforming the SPX, as soon as you close below 30-week average, you're out, and then you lock in your gains. All right. But what about today? So now we want to know, is gold outperforming SPX? Because if gold's not outperforming SPX, might as well stay with the SPX, right? Trend line break above, we're in a green zone. Even for a little while back ago, we had some periods where we're up and then underperforming SPX, but right now we've been going up, testing that trend line right here, that little dot, going up, outperforming the SPX, going down, testing again that trend line, and I'm expecting a bounce off here. I think this can be a low risk area bounce. I think gold's going to keep going up, bouncing up with either the stock market stalling or going down a little bit, and hopefully the Mansfield strength is going to keep going up. You don't buy if the Mansfield's going down, so that means you're losing relative strength. You want to wait until the Mansfield starts going up, and then you know you're in a A++ setup. So this is pretty much going to coincide probably if we break above 1800. So this is a good area to see the strength of gold. Well, we know gold right now, looking at that, is outperforming the SPX. So we're still in the precious metals bull era. Gold is in the bull era. And now we got to look, are there better assets right now in the precious metals complex that we should be looking at? So let's take a look at the Hui, the gold bugs, those miners. I'm going to get to the JDX right after this one. JDX has actually broken out of its long-term 7-year base. Hui, not quite, had a higher high in 2016. So that neckline right here we're really smack on it. A close above 280. For me, the Hui is in the bull era. Not quite there yet, guys. Here's the signal in 2016. And right now, we're above that trend line right here. So we broke above. I think it's a question of time that we're just going to close maybe next week or in the next few weeks. We're going to close above that neckline right here, above 280. And look at that, we're green. That means we're above an inclining 30-week average, outperforming gold. See, that's where I popped in gold. Always the instrument you want to compare against. So next week, or as soon as you have a weekly close above this neckline, if you were playing the gold medal, you could actually start removing some of that and placing some money in the Huey, which now should be starting to outperform gold. Just like right here was outperforming gold in 2016. That's where this is an A++ setup. You have a nice clear signal. This is the type of thing I'm imagining here. The Huey really starting to outperform gold. Not that gold's going to stop going up, but the Huey, the gold bugs index, is going to go up higher and faster than gold medal itself. All right. Now is Huey. What about JDX? JDX versus gold. GDX actually broke out above that neckline, so it's a little more advanced in its own price action. If you wouldn't look at anything else, just classical charting, JDX looks a little bit better than the Huey. See that neckline, that break of that trend line here? Oh, 2016. All that period, you should have been long JDX instead of gold. People love gold, but JDX actually gave you great performance right here. And right now, look at that trend line. Tuck, tuck, tuck. Right here. Right at that neckline. And I think the price action actually went up. So this is a chart that's maybe Thursday before we had that nice Friday close. So we could actually be higher up than that trend line. So as soon as the price action bounces up, and as soon as we just outperform gold just a little bit more, we're going to be above that neckline here. And you're in that green zone. So the JDX, probably a little bit better than the Huey, that it's already above its weekly and monthly defined breakout line that was set at 30.50. But the Beaufort par, so gold stocks are set to outperform gold. Gold's probably trying to work its way, maybe slow down all the way to 1900, 1920, try to touch those all-time highs. So while gold's dealing with that, as you see, gold miners have vacuums all the way up to $40, $43. Huey, same thing. There's vacuums. They're catching up to what gold did a few months back while the miners were trying to work up. Gold has already done its fast gains, and now it's really time for the miners. All right. The final two charts. So right now we know that gold miners is the place, there's a transition, it's a place to be. I want to know the famous, everybody wants to know, when could I go long silver? When is the time? So let's look how the Mansfield Belt of Strength behaved on the historical charts. Silver versus gold. Forget the gold-silver ratio. Oh, gold-silver ratio is super high. It's time to buy. Forget all that. Let's just see the Mansfield when it told you to buy. And what I've noticed is there's really a peculiar way that silver reacts versus gold. Every time it starts outperforming gold, it busts up. It really maniac. Explodes, hibernates, explodes, hibernates, explodes. And there's a couple of things that are really peculiar. I've noticed between those explosions, the first one and the second one, 4 years. Between the second one and the third one, about 6 years. And you could even draw a trend line. It's like they're expanding more and more every time until it's really a blow off. And then after that, once you hit that trend line here, expanding trend line, you touch it, that's it. Silver's done. I'm going to go hibernate for 10, 20, 30 years. Really, really interesting. So this gives you good exit points on those second and third burnout phases for parabolic or explosions in silver. To go long, well, here's the best place. Trend line, inclining, Mansfield relative strength, green zone. That means your 30-week moving average. The price action is above. So you want to catch that. You don't want to waste your time while it's stalling and you're scared it's volatile. You get whipsawed. Really want to wait until it breaks out here, explodes, and then you're out. Hibernates, underperforming gold. Oh, closing up above. Even on the pullback, wait till it starts going back up. Then you get in. Great buying area. Oh, making you sweat a little bit, underperforming, slowing down, it's overperforming, bouncing off that trend line, and then you're in for the whole show. So at least this is giving you a chance. This is not a long time. This is like 79. It's like about a year. But it's giving you a chance to enter the best place. Here, you enter a few years earlier or 2 years. You might get whipsawed. You're there in the zone. You're waiting for whatever to explode. Wait until it really gives you a chance to show you that it's ready, guys. So that was for 69.81. And here is really where it gets fun. It's the recent era, silver again versus gold. Same type of thing. So this is the 99. This is the bull era we just had previous to our bear market. Same thing. See, crescendo going up, higher burnout. Oh, crazy higher burnout. Perfect trend line. One comes in threes. The third one's really the most crazy one. And on the third one, you really gotta get out of there. That trend line, that hit is really a good point to get out of the ultimate top. When you get in, well, inclining trend line on the Mansfield Ultra Strength, inclining Mansfield Ultra Strength, and then after that, you get out when you're below 30-week average. Don't waste your time here. And when you see you're underperforming gold that much, that's how much gold is saving you. That drawdown. That means gold really didn't draw down as much as silver. So this is really a testament to gold's less volatile properties compared to silver on the drawdowns. Less volatile on the way up, but also less volatile on the way down. So that's a very good property of going long gold. Again here, a little chance to get in on silver, a little blow. Then after that, you wait a little bit more, and then you got the last single to catch that last crazy run right here. So silver, for me, it's not something you could buy and hold it for a long time. But if you're really attracted to that exponential, that burnout phase, well, the Mansfield Ultra Strength is really giving you great opportunities to exit and to enter when it's really starting to heat up. So the Mansfield Ultra Strength is really telling you when it's starting to outperform gold. It has nothing to do with gold-silver ratio. So where we are today, super important. First tiny burnout, second tiny burnout, and here's the third one. Maybe eventually this is going to be fractals, might get bigger and bigger highs. But right now, these are the top 3 points that I see. We're nowhere close. I know we're super low, so somebody could say, I want to get in here. But you could waste a lot of time. You don't know when it's going to go up. So we might as well wait, stay in gold until silver really starts outperforming gold. And hopefully you get that burnout run that's going to go exponential right here above. So we're not there yet. Check out that trend line. It's beautiful, right above the zero line. When silver starts going up here, outperforming gold, then we have a chance to burn out all to that point number 3, where you could probably want to take profits accompanied along in a weight of evidence approach. So that's it. I'm going to keep using Mansfield Ultra Strength to compare to other parts, probably the juniors next time or silver miners. And that's going to help you choose the A++ setup, guys. All right, hope that helped. Don't forget to like and subscribe. Ciao, guys.